Okay, Assalamualaikum and good morning to Dr. Popola and our fellow friends. We from Group 2 going to present topic Audit of Purchase Cycle. So this is our group members. My name is Muhammad Faiz bin Sumamri, number matric 265086. Before we start, for your information, Audit of Purchase Cycle have the same structure with audit on revenue cycle and payroll. So if you understand this topic, easy for you to understand those two topics.
Hai, Assalamualaikum dan salam sejahtera. My name is Nur Afakila binti Mak Nasin 264529 and today we will be present about the purchase cycle in auditing. Before we start, I would like to show the contents about the purchase cycle in auditing for this presentation. We have introduction, audit objective, nature of purchases and account payables, accounting system and control activities, developing audit plan, further audit procedures, and the conclusion of purchase cycle in this presentation.
We start with introduction. Purchase cycle is a process to acquire goods or service for your business. There are a few simple process. First is requisition of goods or service. Second, place order to supplier and we receive the goods or service. Third is record all bill and payment of account payable. Audit in purchase cycle are needed to evaluate purchase cycle, so they are fairly presented. It is important for company to reduce risk to ensure the process carry out effectively and efficiently. Auditor will develop audit plan and further audit procedure to obtain understanding of entity and internal control, and also to obtain sufficient evidence. Next is audit objective. There are three objectives. First one is transaction objective. Next is balance objective, and lastly is presentation and disclosure objective. For transaction objective, this objective is related to transaction and mostly regard to income statement. There are few elements which is occurrence, completeness, accuracy, cut-off, and classification. Okay, next is balance objective. This objective related to the ending balance in accounts and to the balance sheets, mostly about assets, liability, and equity. There are a few elements which is existence, right obligations, completeness, valuation, and allocation. Lastly is presentation and disclosure objective. It's related to the presentation of information in the financial statement. There are a few elements: occurrence, right obligations, completeness, classifications, and understandability, and accuracy, and also valuations.
The next slide is about the nature of purchases and account payables. Before we discuss furthermore about the purchase cycle, the auditor should understand the process of purchase, payment, and purchasing of transaction adjustment while auditing the purchase cycle, particularly in the modern age where it has done in a computerized environment. Information flows in the cycle through numerous accounts such as purchases, cash payments, account payable, and purchase returns and purchase discount. After fulfilling the buying order process, the purchasing department will order the products from the vendor. The document includes shipping notice and payment invoices are used to collect and pay from vendors. Journals, accounts, and statements are involved in the recording process, while a payment voucher is a document used in purchase and account payable payments. So, to further our discussion more, there are risk assessment about the account payables and purchases. Account payables are generally known to be high-risk account when we audit account payable and purchase transaction. This is because the account payable may be to subjective environment that contributes to misstatement due to thief or mistake. Unrecorded liabilities, expenditure fraud, and duplicate transactions could occur if they are not appropriately audited. To overcome this, the account payables are usually checked by submitting confirmation letters to vendors, telling them to fill out details such as all outstanding invoices, payment condition, and payment history. So for the auditor's roles, auditors should develop an effective audit method based on the assessment of defined risks at both the financial statement and assertion stage. The risk assessed vary between the content classes of transaction, account balances, and disclosure. Hence, the most suitable and efficient approach to auditing the purchase's completeness. If the auditors are auditing in a computerized environment, the auditor can use the CATs, which presents computer-assisted audit techniques to help them auditing the company's statement to detect any unethical business they operate, such as misstatement and fraud.
Hi, I'm Nur Aina Shafiqah binti Muhammad Sofi 264624. I will present accounting system and control activities part. For your information, there are 5 main functions in purchase cycle. It was purchase requisition, preparing purchase order. The third one is receive and store goods for inventory. The fourth one is approve supply invoice, and the last one is record the purchases and liabilities. The first is purchase requisition. Purchase requisition is a form of control to ensure that goods requested are appropriately ordered and received. Basically, before we send the form to purchase department, this form needs to fill by warehouse and authorized by requisition authority in the warehouse. The request need to be checked so that the objective can be fulfilled, which is occurrence of transaction and no fictitious transaction created. The second function is preparing the purchase order. After receive the authorized purchase requisition form, the purchase department will prepare the purchase order by filling in the information needed similar to the purchase requisition form. This is to prevent the fraudulent of requisition of goods for personal use. The audit objective that need to fulfill is occurrence, which is the purchase order used to ensure the purchase are really occurred. And the second objective is completeness, which is it was to determine that goods are ordered, already received and recorded. The third function is receive and storing the goods for inventory. So after the purchase order already approved, it will be sent to the warehouse and they need to ensure the goods received are duly ordered, and they will deliver the unordered goods should be rejected. So storekeepers need to prepare the pre-numbered goods receipt notes to describe the goods, quantity and condition of the goods itself and sent to the accounting department. So the objective of this function is occurrence, which is the good receipt notes are prepared to ensure whether the purchase transaction really occurred. So the second one is completeness, which is the accounting personnel perform an independent check on the sequence number of goods received notes to match with the purchase transaction occurred. For approving supplier invoice, basically the supplier invoice will be sent to the accounting department by the supplier. Objective they need to fulfill, which is the first one is completeness, where the all suppliers invoice are recorded by providing serial number for all invoice received. The second one is occurrence, when the all suppliers invoice relate to a valid purchase transaction by checking the invoice and matching against the goods received notes and purchase order. The third one is accuracy. All suppliers invoice amount are calculated accurately at an agreed price. The fourth one is accuracy classification, when the all suppliers invoice are recorded correctly to the appropriate accounts. The last function is record the purchase and liability. So control should be established by entity when they record the purchases and liabilities to ensure the objective are met. So the first one is objective completeness, when all transactions are recorded. The second is occurrence, when no unrecorded liabilities. The third one is accuracy, when all purchase amount are recorded accurately. And the last one is cut off, when the all purchase amount are recorded in proper period. Okay, when company wants to record sale, they need to follow a step. So the first step is supplier invoice will enter in purchase journal accounting numerical sequence. The second is supplier invoice posted to accounting payable subsidiary ledger. So the fourth point is general ledger and accounting payable are compared periodically to make sure the balance are same. The fourth step is purchase journal is ported to general ledger, and the last step is monthly suppliers statement is reconciled with account payable balance.
Hi, my name is Nur Aina Maisara binti Tajul Maslan and my metric number is 264448. Now I will continue with the audit plan in purchase cycle. There are 4 steps based on the slide, so I will go through to the first step, which is understanding the entity and to identify inherent risk. So this first step is important because it helps to discover the potential misstatements that could occur in financial statement. There are few things that auditors should acknowledge: the nature of business entities in terms of types of products or services that company provide, and determine the cost of sales and gross margin can help to understand the products. By understanding the entity and its environment, we can understand the client's business and the average payment period of the industry. And also, we can assess to inherent risk. Inherent risks are derived from motivation of management to inaccurate report expenses, such as pressure to achieve the target profits. So, auditor must ensure to control purchase cycle efficiently to identify fraud risk. It could reflect its response to risk of fraud. The second step is to obtain an understanding of internal controls over purchase cycle. In purchase cycle, in order to shrink the inherent risk in purchase cycle, it is important to have an appropriate and effective internal control. So, auditor can prepare a written description of flowchart and complete questionnaires of internal control for purchase cycle to better understanding of internal controls. This can help auditor to figure out whether the implementation of internal controls over purchase cycle has been used appropriately and effectively. For example, auditor can observe the implementation of segregation of duties between purchase approvals and invoice payment approvals. Without segregate these duties, it may lead unauthorized purchase and fraud. The third step is assessing risk of material misstatements. When we already do the first step and the second steps in audit plan, auditor can easily assess the risk of material misstatements, which in financial statements level and assertion level. For example, auditor can discover any susceptible to risk of understatement in purchase cycle due to pressure to report high profit. Moreover, auditor can assess if controls over purchase cut-off are effective to ensure that purchase cycle are recorded in its proper period. The auditor can decide to make further audit procedure once they determine risk of material misstatements. The last step is design further audit procedure. There are 2 procedures regarding in further audit procedure, which is test of control and substantive procedures. These 2 procedures can help auditor to evaluate how many tests that should be performed because the amount of procedures performed are based on the assessed risk level. For example, auditor do test of control in event that has internal control in place that exceeds the maintenance of records of purchase cycle. However, auditor does not have sufficient evidence to discover whether the internal control system are functioning effectively to mitigate the risk of material misstatements in purchase cycle. In addition, event that has high risk of control means that level of substantive procedures that should be performed also high to obtain audit evidence. Auditor should address any significant risk of misstatement by evaluating the design of related controls to determine whether they are implemented effectively. Auditor neither rely on evidence obtained in prior periods nor analytical procedures to address any significant risk of misstatements in purchase cycle.
Assalamualaikum, my name is Nur Shafinas binti Uthman, metric number 264632. Next, I will continue with the further audit procedure. So, the substantive procedures is conduct to identify the significant misstatement in reports and presentation. It's also intended to provide the proof of claims in the financial statement. In designing the substantive procedures, auditors should be more concerned with collecting facts in order to assess the completeness of the transaction. Auditors also should prepare more diligently in terms of the nature of the procedure and ensure that the form of procedure is effective in obtaining the required audit evidence. And the appropriate substantive procedures could helps to reduce the risk of detection when the possibility of materials error remaining undetected. So the disclosure is auditors should review the list of accounts payables and determine their category by reviewing any debits balance in the payable list and also review the minutes of meeting of any supporting documents. So basically there is three types of substantive procedures, which is the first one is analytical procedure, second one is test of details of transaction, and the third one is test of details of balance. So let me go to the analytical procedure. Analytical procedures consist of the assessment of financial information by analyzing the possible relationship among financial and non-financial data. It is used to confirm the expectation and performing in 4 stages, which is the first one is to review the understanding of an entity as whether any changes to the payables balance are expected, to determine any fluctuation in amount of payables and purchase, to determine the ratios and trends for the gross profit and average payment period, and the last one is to analyze the expenses account by reviewing the ratio between each category of the purchase. So next is test of details of transaction. The aim is to corroborate the test of details of balance. So these transactions are usually carried out during the interim audit and in the form of dual purpose tests. So the test of details transaction involve in 4 document inspection, which is vouching, tracing, purchase cut-off test, and also payment cut-off test. So the first one is vouching. Vouching is an action to vouch the report of purchase transaction in support of the records. The aim is to verify that transactions are valid. Tracing, where you track the purchase order, GRN, the supplier invoice to purchase journals and account payables in order to validate the completeness of document. The third one is the purchase cut-off test, where is to ensure that current year purchase and payables are recorded in the current period. The last one is the payment cut-off test, where to provide the evidence that payments are recorded in the appropriate period. So the last test is test of details of balance, which concern on obtaining evidence for account payables balance. These tests do not concern on the debit or credit, but the balance at the end of the periods. It involves 3 tests, which is investigating for unrecorded liabilities, confirmation of balance, and review the monthly payables reconciliation. So that's all from me. Thank you.
To conclude, for this presentation, the purchase cycle is essential since it consists of 2 primary accounts, which is purchases and account payables. The auditor should understand and recognize the company's business function or any organization related to any purchase transactions, including credit and cash purchases. The audit objective for purchases and payable transactions are occurrence, completeness, accuracy, cut-off, and classification. So the auditor should relate the audit objectives by determining the assertions for purchase and account payables. The auditor should conduct control tests to determine the control risk, and the sum of substantive tests need to be carried out to achieve. The completeness of the records is the primary concern for auditing account purchases. Thus, searching for unrecorded liabilities is a necessary procedure to be performed by auditors. That is the audit's objective. Thank you.